Hello everyone, welcome to another lovely episode with JayFx. Welcome to the episode 8 of the Harmonic Pattern Mentorship. Okay, so I'm a little bit excited for this episode because earlier this year, this entire series was actually just an idea. And I was actually thinking of not doing this. And today I'm actually on the episode 8, so it's kind of like exciting for me. And I'm going to just share with you guys a roundup idea of why I decided to take this whole episode, dedicate it to harmonic patterns and breaking down this entire strategy in the first place. Because we're going to be ending it in episode 9. All right. So I believe my aim has been achieved. And I'm just going to do this as a roundup to using all this Confluence on the charts. Basically the entire series of this harmonic pattern mentorship is to show you guys how harmonic patterns makes sense and also to use it with other strategies like smart money concept and Elliott wave, which Elliott wave is a let's say a logical and a mathematical concept as well. And a harmonic pattern is a model, a pattern-like concept as well. So those are like two different perspectives of technical analysis in Forex trading. And I might just, show you a brief history of the logic behind harmonic patterns to give you guys a basic preview of how this strategy can be used as confluence trading. Okay. So my aim was to just show you guys how I use it as confluence trading because I'm a confluence trader and I do know harmonic patterns. And sometimes I just apply them to the charts. But like I said in the previous episode, it's going to be very, very strange for me to just come online and just start teaching you guys about a method that I've not really showed you guys anything about it online. So I decided to take this particular challenge on me since I did a lot with own about 6 months ago. And I decided, let me just do one for harmonic patterns as well. And you guys can have that pre-recording and, have that refreshment to this particular strategy whenever you want. Okay, so on this episode, I'm going to be showing you guys like some of the ways I use Elliott wave and the places I apply harmonic patterns and also, confluence a little bit of smart money concept. Basically, just do my trading the way I would, you know, knowing quite all right that there's episodes dedicated to these methods that you yourself can go and watch to understand how I am able to do these stuffs. Okay. So on today's episode, I'm going to be making an analysis, basically breaking down the price action using both Elliott wave, harmonic patterns, and smart money concepts. And then episode 9, we'll do something similar. And then, moving forward, we'll just be making harmonic pattern analysis like this, to give you guys that confidence, understanding, and maybe a preview whenever I have such, insights on the chart. Okay. So now, this is on the daily time frame. And if I was to use harmonic patterns to observe this chart, because I told you guys I use it on the higher time frame. So I can't really just go with harmonic patterns with Elliott wave, sorry. Once I go to the lower time frame, I just have to use it on this higher time frame here, understand what's going on. And then when I move to the lower time frame, I just, use harmonic patterns and smart money concepts to see whatever is going on there. So let's say this would be an impulsive wave, obviously. As you can see here, the impulse is on the downside, impulse, correction, impulse. So it's kind of like it's a bearish trend. So the impulse is on the bearish side. So this would be, let's say, 0, 1, 2, 3, 4, 5, right? Now, I gave an analysis and a preview of alternate count on Elliott wave as I think the last episode before this one. That was I think last week. So if you're new to Hello Wave and you like to gain insights on that as well, you can go and check it out on the channel. So all these stuffs are already broken down. From here on, it's just going to be analysis, okay? So let's say if you're a newcomer or this is your first time checking out the channel, everything is arranged and organized for you to learn and catch up with whatever method you're looking for. Okay, we focus on breaking down technical methods of trading the Forex market and also looking at fundamental insights to use as confluence. I don't have a particular strategy. I'm a confluence trader. I trade what I see and I use what I know. And I have a lot of knowledge. So what I just do is just trade what I see. Okay. My main key is predicting market structure. Because I personally, I believe that market structure is basically footprint of the trend. So once you can read the market structure, you already know how to read the trend. So when you know the trend, you know the market structure, you automatically know the direction. And when you know the market structure, you know the higher time frame, which is known as the external structure, and the lower time frame, which is known as the internal structure. I'm not talking about higher highs and lower lows. I'm talking about smart money concept way of market structure. If you've been following me, you understand the method I'm talking about. So that is the way I trade. And when I'm analyzing, is a different stage from trading. Analysis is analysis. Trading is trading. I do trading on MT4 on my phone. I don't really use system, but I do analysis on the system and then I go trade on my phone. So those are like two different things. When analyzing, I'm trying to understand the market direction. That is using different methods. Okay. But when I'm trading, I use key methods within smart money concept because I already know the direction from the analysis. This is how I do my own trading. What I'm teaching you or what I'm doing is basically providing content for my platform while keeping up with the dedication of, breaking down different technical methods of trading and sharing with you my experience as a Forex trader. Okay, so if you're new, I just gave you a review of what we're doing and I'm about to hop into the analysis. Okay, now, if you're using a lot wave, we can see wave 4 did not retrace into the territory of wave 1, right? Wave 3 is the longest wave. Wave 2 is a correction. Wave 4 is a correction. So basically, this is practically correct. Okay. I'm not saying this is, somebody could have a different alternative from a higher time frame, but this is the trend. This is what's going on here. What wave is this, from the higher time frame? I don't know. This is where we're starting from. If we were doing a proper analysis like that, I would show you. For now, I'm just trying to break down what's going on here using different methods to give you insights to how I would place harmonic pattern if this was, that kind of analysis. Now, when you're looking at confluence trading, have you seen the market structure? That's the first question. And once you've seen the market structure, now we have this point as the last obvious bearish trend, right? So we have a break of structure here. This is coming in with smart money concepts. We have the Elliott wave trend preview, right? We have the rules check, longest, Now we're going to look into some smart money concepts that could help us understand from this point to this point, because this is our main focus now. We know the higher time frame trend is bearish because this is still bearish, right? But what we want to know now is this high valid? Is this within discounts? Or are we heading to premium? So are we buying from here? Or are we selling from here? That's the main focus. We just had to know a review of what's going on here to be able to predict what's going on here. So I'm just going to use Confluence to understand it. Basic market structure say we're expecting something like this, right? That's basic market structure. Lower low, higher low, lower low, okay? So we would say this is a break of structure. Now let's look into the premium and discounts. That is using supply and demand concept. This was a drop. Let's say this is kind of like a base, something like that, but this is all within discount, right? So it's possible if we go to the lower time frame, this is like a change of character. Market could be going down from this end here, right? On the lower time frame. Or this could be a potential target and price could want to clear these highs, for a much premium price. Whichever way it is, you can leave your comments about your own thoughts or what you think about what's going on here. But at the same time, this is just analysis. We're trying to understand what is going on. This is, a prediction. So at the same time, if we look from this angle, we can see that this is also using smart money concept. I've told you guys multiple times, I use multiple perspectives on smart money. So right now I'm looking at it from the counter structure perspective. So the trend is bearish. So we're looking at it from, a bearish angle. So if we say a counter structure, we would say this would be the internal structure. That's like a counter idea to the trend. If price is actually shifting bullish, okay, so that way we don't miss out on anything, and I'm safe. This is how I do my own trading. So now once this is understood, we have this insight. What do we do next? Now I go to the lower time frame. This is enough information on this time frame to, go head on to the lower time frame. Let's go to the 4 hour time frame and see what we find. Okay, so now we're focused on the lower time frame here. We have a shift. So let's take this out since we already understand what that is. Let's leave that for now. Let's say smart money concept is very easy. Everybody knows that. It's kind of like giving you a pattern-like explanation of what's going on. But when you start using tools like Elliott wave and harmonic patterns, you have to be calculative. Okay. So let's say this is a correction. And I've told you guys in previous episodes on harmonic patterns that when you want to use harmonic patterns, it's best to use them on corrections because they help you to understand the retracement and likely what's going to happen next. Okay, so when you're already in an impulsive move, it's not that suggested for you to use because most of harmonic patterns are reversal patterns. Rarely you find continuation patterns from them. And even if they're continuation patterns, they happen when there's a retracement or places like this and generally things like this. So if we were saying this was the internal structure, that's to say the 4 hour structure, right? That would be from this point. Let's say this low. Let's use this one here. Okay. So price failed to create a lower low here, then failed to create a higher high here, right? Now it's also creating a lower high. So this is kind of like a ranging market. So we have a ranging market now. This is premium of the daily. This is discount, of the daily. So we're within discount, but on the 4 hour time frame. So let's look at what's going on within this range here. Now, if we're using Elliott wave, we are expecting the corrective ABC pattern, right? So let's say this was wave A, and then this was B, and then this was C. That's using Elliott wave, right? So with this being wave ABC, coming from the impulsive pattern we had previously, if it was still bearish, likely this would be something like this. Let's put it this way. This would be wave 1, and then we'll expect something like wave 2, maybe 3, 4, then 5. Obviously, you're going to be using Fibonacci to calculate that if you were, doing that. But I'm focused on just this area because that's what we're trying to predict, right? And then, okay, now since we have this preview, this perspective, what I would do is to use smart money concept because we're now on the lower time frame. Smart money concept is easier to use to predict what's going on in times like this. So this would be like let's say a change of character or a break of structure, for what we're expecting price to clear out this high, being a weak high, as it failed to clear out this low. The change of character that happened here. But since that did not happen, and then we have another change of character here, this could also be a potential area of interest. Okay, to ride price to the upside, right? And this could be the change of character. So this is like using smart money concept to see both perspective, both angles. What do we do? Okay. So now in situation like this where things get complex, you have Elliott wave supporting this retracement. So let's say we use the Fibonacci tool in support of Elliott wave, not harmonic patterns. That will come in later. I'm just trying to give you guys a review of using multiple methods at once. This is like confluence trading. Okay. This is what I was originally planning on doing. But I felt like if I was to do something like this and mention too many tools like Fibonacci, harmonic patterns, Elliott wave, SMC, order block, that's going to be very, very complex for someone who doesn't know what Elliott wave is, who doesn't know what harmonic pattern is, who doesn't know what strong highs and weak lows, all of those stuff. So I had to make individual videos breaking down most of those things, explaining them over time as I learn them. Then I practice this method myself and then confluence all this stuff together and see how I can best predict the market. So if you follow me on Telegram, you must have seen my results. Or if you follow the platform on Instagram, you must have seen most of our results where we have shown multiple track records of previous analysis before they played out. I'm saying we because as you all know, the platform is now multi-structured. So we have multiple individuals who are also into this craft like me, who have also shared the analysis over time. We have people like PowerFX, King Solomon, Governor FTP, Pico FX, Gray Holdings. We have so many individuals who are here. We have Shane, we have females too. So we are kind of like building a community of traders who do this kind of stuff, and we're trying to do it in a more responsible and respective way, like we're doing right now. Okay, so we're making it more professional than content creating. So looking at analysis like this now, when you have double perspective and you're using different methods, it's not that complex for you to understand what's going on, you know, than being limited to just knowing ICT or being limited to just knowing SMC. When you know how to use different things, you can just, swing around the sites and, pick perspectives of what you see, not what you think. You don't force the method on the market. You just basically predict the market based on what you already know. Okay, so let's look at this range now. We're using, let me flip the tool. I think it's upside down. So I did the same thing again. Okay. So the 61 Fibonacci level, which is like the major key level in Elliott wave, says we should be expecting price at this level, right? So let's say let's mark out the key level of this point. This has already been mitigated. This is like this other block over here. This has been mitigated. So let me not mark that. Let me just leave it at the 61.8 Fibonacci level. So let me take this out. Now, in a situation like this, what I would naturally do is use other Confluence to understand what's going on. So if we bring back smart money concept, we would say this is like an other breakup block area, right? So it's kind of like valid to say there's every possibility that price could be reacting from this point. We could use this as a fair value gap, and then you could say this point, or focus on this point, or focus on this point. But basically, that's like a major key area, right? Yes, I can see the Fibonacci, the fair value gap area within this point here. So there's every tendency that price could decide to react from this place, which would be like the 50% rather than the 61, right? That's like saying something like this. But those are all speculations. Now we have to see a change of character from the lower time frame here to predict this, right? So what other confluence can we add to give a greater understanding that we're bearish or that kind of stuff? That's what I would ask, and asking something like that would require you to know other methods too, which is why we have those recordings. Now, let's say we want to use harmonic patterns as I've taught you guys in previous recordings. Let's understand what's going on within this range. And let's take this action as a retracement. So let's say we are still bearish. That will be understanding that we have to draw out the fib tool from this point to this point. Remember, this is within discount of the daily range, right? This is within discount. Let me flip that. Sorry. I don't know why I like it from the other angle. Okay. So we would have this as a 61.8 Fibonacci level, very significant level. That's very, very obvious on multiple time frame now. That particular key level is very obvious. And I've not even drawn out the harmonic pattern yet. We can clearly see that that's a very significant level on the Fibonacci tool. So let's say we're trying to draw one of the patterns. I'm trying to look at my book and see where I could, basically identify one of those. So let's say something like this. A, B, this would be C. Right? So this would be like let's say depends on the pattern we're trying to predict. And if we're saying this is going to be reacting from this point, then we'll have to shrink it down, right? But if we're looking at how it's going on right now, then we could be expecting something like this. So you have too many tools. So this is how messy it gets when you're having multiple Confluence. Now that's where you have to now filter out some noise. Okay. So if we have something like this, that's like I think this is the butterfly pattern now. If we have something like this here, this is a different perspective. Okay, so I'm going to take out the Fibonacci now. So I believe everybody is understanding how I got to this point. And if we have a prediction for this as wave 2, let me take this out. Now, because we have a bullish projection from a different method, doesn't mean that this is still invalid. Okay. Remember on the daily time frame from earlier on, when I was on the daily, I told you guys there's every possibility that since price is still within discounts, there's every tendency that we could still see a bullish move, before price heads back down. So let's say, and if we look at this now, with price coming back to premium of the daily range, we have another block here. Okay. So price could decide to clear out these highs, mitigate this other block before going back down. Now, this is a different view entirely from what we were thinking internally with Elliott wave, right? So if we had not known how to, maybe confluence a little bit of harmonic patterns, this would have not been possible. Now, does that mean that this is not a valid point? As we can see, it's a breaker block on the daily time frame, right? So if we go to the 4-hour time frame, again, the breaker block is a concept from SMC. From the way I'm flowing between these concepts, you can see that I am very, very experienced with it. All right, so I'm very experienced with this Confluence trading I'm trying to show you guys here. It's not like after giving you guys the 8th episode, I'm now, teaching you guys harmonic patterns. That's a different case. What I'm doing here is Confluence trading different methods. Okay, what the flow between this Confluence is something you have to have experience with. You have to have tried it and failed, being successful multiple times. Different experience. You have to learn from your own experience to not just from YouTube, because this is still YouTube. So you have to test them out, see how it plays out, and know how you better confluence this on your own. Okay, so with this perspective we're seeing right now, what do you think would be my prediction? I would rather pay attention to this for an obstacle, expecting something like this. This would be my prediction. Okay. And if you would ask me why, you can clearly see this is a significant level, right? From the earlier analysis we did. So if this does not hold, this whole projection of this getting cleared out, that means this will get mitigated and price will drop, right? So if that's a possibility, then this is a single projection and it has to be, outlined. And then also, we also confirm that this is a weak low. This is also a weak high, fails to break the previous, high. So there's every tendency this is liquidity. Okay, there's every tendency this is liquidity. So with that confirmation, this is also not, a very strong high. So with that confirmation, there's every possibility that we can be correct, from this. So this is kind of how I confluence harmonic patterns. This is how I use this confluence. And this is how I use the technical methods to understand my analysis. So if you were to, watch the episodes from episode 1, 2, 3, 4, and you are now currently at episode 8, you're clearly seeing that I don't really base on just these concepts to predict the market. Okay. And outside all this, I still have my trading plan. I still have my risk management. I still have my risk to reward ratio based on my account and so many other confluence to keep me in check for profit. Okay. It's not just harmonic pattern mentorship and then you have profit. There are so many other factors involved in live trading, regardless of your experience with technical analysis. Okay. So this is confluence trading, and this is how I kind of like apply them with SMC, Elliott wave, harmonic patterns, and so many of the other methods. Many of you must have seen my chart, and you can see that I use support and resistance, supply and demand, Wyckoff. So whichever method of what I can use to predict what is happening on the market right now, or what I can see on the chart, I'm okay with it. And that's how I basically trade. Okay, that will be all for this episode. On the next episode, we'll do a roundup of, an analysis like this. And I'm also going to be showing you guys how to do something like this too. Okay, I'll see you guys on the next episode. Bye.